Mortgage rates are back over 7% after Fed Chair Powell was his testimony today. Tukes, let's play the video for the folks who didn't see it. Shout out to Trinika. What's going on? Let's play this video for the people who didn't see his testimony.
All right.
Let me shut the hell up.
With the remarks from Chairman Menendez supporting a Latino nominee to the open seat on the Federal Reserve. It's been more than 100 years, and a Latino has never served on the Federal Reserve Board. And I know there are many strong Latino economists and economic experts who would capably serve. So I want to put that out there. Chairman Powell, I also sit on Senate Finance. Right across the way, we were talking about affordable housing. I think for purposes of so many of us across the country, including
they can't hear.
Nevada, when we talk about affordable housing, it's also about work.
They can't hear it?
No, they can't hear.
Sure, families that are working so hard have an opportunity to keep a roof over their head. Right now,
no one can hear.
You're making minimum wage.
Hold on. Sit tight. Can y'all hear me? Sit tight. Somebody said I can hear it. They can hear it now. It says very low. You got to turn it up.
Hold on.
Hold on. Tukes is working, y'all. Tukes is working. Y'all making Tukes earn his money today. Talking about y'all can't hear. They said the video is long.
Nah, it's playing normal.
You can hear it on your headphones?
Well, nah, because that's our audio. I just checked to see if it was playing system audio.
Okay.
Hold on, I know. Oh, here we go.
This is what happens on a live show, ladies and gentlemen.
Okay,
Rewind. Drop a bomb on it like Flex. Those bombs in the... Put the bombs in the chat like Flex. Drop a bomb on it, Tukes, like Flex.
let's see if you guys can hear it now.
Let's go.
With the remarks from Chairman Menendez supporting a Latino nominee to the open seat on the Federal Reserve. It's been more than 100 years, and a Latino has never served on the Federal Reserve Board. And I know there are many strong Latino economists and economic experts who would capably serve. So I want to put that out there. Chairman Powell, I also sit on Senate Finance. Right across the way, we were talking about affordable housing. I think for purposes of so many of us across the country, including in Nevada, when we talk about affordable housing, it's also about workforce housing. It's about making sure families that are working so hard have an opportunity to keep a roof over their head. Right now in Nevada, if you're making minimum wage, you have to work 75 hours a week just to be able to afford housing. And so I want to talk to you about this. I was distressed to see in the report that that activity in the housing sector has contracted as a result of the elevated mortgage rate, and you've been talking about that. I often hear from Nevadans who say, I don't know if I'm ever going to own a home, and many feel resigned being stuck in a cycle of renting. So, Chairman, how do the Federal Reserve economists and leaders think about the balance between keeping interest rates low to spur that affordable home building and home buying while addressing inflation?
We have a dual mandate from Congress, as you well know, which is maximum employment and price stability. And that's really what we take into account. We don't, and of course, interest-sensitive spending is the thing that gets the most support when we cut rates and the thing that is most affected when we raise rates. And that means housing to a significant extent. That's not a choice that we make. That's just the way it works. And we only have really one tool, which is monetary policy. So, you know, we don't really try to use our tools to affect broader housing policy, but really just to achieve our statutory goals.
For businesses.
Okay, I gotta play it.
Play it again? Damn it in hell. All right. I guess you can take this off the screen now. So look, guys. First of all, there's a lot to unpack in that, Tukes, and audience and class. Let's have a conversation about this. First of all, I need y'all to like this video. And I'm giving away 7 webinars today because I think that's a great number, first of all. But this is very important information right here. It's a lot to unpack in here. First of all, she said that people who are making minimum wage in Nevada have to work 75 hours to even afford a home a week. That is absolutely insane. But it's not really insane because if you make it minimum wage, it's so, you see how they kind of like be framing this stuff? Because I don't think nobody heard the word minimum wage. They just heard 75 hours.
I honestly didn't hear minimum wage.
You didn't hear minimum wage, right? You want to rewind it again and play it again?
I have to wait for the ad.
Because I think you got to really like really listen to it, how they be framing these things up, right? If you're making minimum wage, you got to work 75 hours to work a house. But let's call a spade a spade. When has anyone on minimum wage really been able to afford to buy a house anyway, no matter what the market was?
What is minimum
I don't even know.
wage right now?
12, what is it, $15? I don't know.
It's been
$13?
I haven't had minimum wage since like I was 14.
But this is what I'm trying to tell you, right? And there are a lot of adults who make minimum wage, but there's a good possibility if you're making minimum wage, depending on where you live, and you can't even afford the rent too. It's a great possibility of this.
In New York, absolutely.
Oh, absolutely not. Not high cost states, absolutely not. So that's one thing I want y'all to unpack, right? Right, is that somebody said Colorado is $19, right? But
I feel like it's 15.
I think it's probably 15 too.
15 or I think it's $15 an hour where we're at.
Yeah, but it's still like when you listen to these, when people are talking, you got to really listen to what they're saying, because when you say that, people only hear like, oh, 75 hours. People can't really afford. They got to work overtime and all this other just to afford anything. Well, no, she said minimum wage. That doesn't mean everybody. That's number one. Number two is the main thing is power, right? And the feds. The feds are hell bent on getting inflation to 2% right now, basically trying to make things a lot cheaper. That's all they're trying to do. But in the term and how they try to do that is by raising rates, monetary policy to raise rates to make things more expensive so people stop buying, basically, right? It's not working.
In the housing market or just overall?
Overall.
Interesting.
Housing, which is rent as well, which is, foods, goods, gas, anything we do on a day-to-day.
Yeah.
Right? It's higher now. They're trying to deter people from spending. They want unemployment to go up. They want companies to lay off people, right? They want doom and gloom because they figure that will lower inflation and bring down to some normalcy, and then you can start pumping things out again.
Yeah.
Right? We are in for one hell of a ride, I can tell you that much. This is going to get interesting over the next couple months. But after they said that, like rates, over the past 30 days, rates have been crazy, right? They started off in the low sixes, then they just started bumping up slowly but surely. High sixes, low sixes, went back down a little bit, came back up. Now we over we opened the day like below 7%, like 6.8, 6.875, somewhere around that. And when you see the rates, it's normally for, matter of fact, bring up the rate screen that I showed you. Let's shout out to Jermaine. Everybody go follow Mortgage Maine. Right, so this is one of my favorite websites. I always tell you guys to go here. Mortgage News Daily, y'all. Mortgage News Daily. This is the source where you want to go to see what the daily rates are. Now, when you're looking at this daily rate survey, this is probably one of the only websites that I would trust when it comes to mortgage rates, right? Because it's not about the advertisements. When you go on other websites, they're pumping advertisements in the rates, right? This is just giving you based off of what lenders are actually pricing out. So it's very accurate. There's another website too, but I'm not going to go there because we already hit, and it's pretty much the same thing. So now when you look at this chart and you see a 30-year fix is 7%, I want you guys to all understand this is for single family properties.
Okay.
Conforming loan amounts, typically 20% down with a primary residence.
Conforming loan amounts?
Conforming loan amounts. So there's different loan limits depending on where you are, right?
Okay.
So a conforming loan amount, I don't even know. Jermaine, what's the conforming loan amount right now? I think 700 and something right now.
Oh, it's
a number, yeah.
Okay.
Matter of fact, let me just go to Google real quick because I don't even know offhand.
No,
right?
You say loan limits. That's like how much?
I think I discussed this on the channel already.
But that's for like a single family property, you're saying, right?
Yeah. So let's go to So the baseline loan limit for 2023 is 726,200, right? And if you live in a high cost area like New York, DC, somewhere right there, then you can get higher. I think it's like $1 million you can get, and that means Fannie Mae or Freddie Mac will buy that loan from the bank.
Is that when we looked at that? We went on the
charts,
website,
yeah,
and then we saw like the loan limits for I don't know what,
exactly. Basically, same.
okay.
It was like FHA and PMI.
But for a single family, it was higher, right? Or I'm
So-
sorry, it was lower. It's lower.
It's
for a
lower.
single family, and then
All
multifamily is higher.
So
right?
I'm gonna break it down for you and everybody else, right? So when we say conforming loan limits, right?
Yeah.
That means any loan in America, if you're looking to get a house and the loan amount is under 700 and what I say, 726,
Yeah.
that means that Fannie Mae, Freddie Mac will buy that loan from the bank,
Okay.
right? That's called conforming. Now, if you live in a high cost area that they designate a high cost area, like
Right.
New York, LA, DC, Seattle, you can go up to $1,089, $1,089
Okay.
for a single family, and they will buy that loan from the bank.
Okay.
That's called a high balance loan, right?
Right.
So you have a conforming loan limit, which is all over the country, up to 726. So in a state like Georgia, a city like Atlanta, that's not considered a high cost area, although it's more expensive than it was,
Right.
right? Their loan limits used to be 417 years ago. Now it's up to 726, so it's a home run for someone in Atlanta.
Okay.
You got it?
Yeah.
But if somebody wanted to buy and get a $900,000 house and still put 5% down and use a Fannie Mae or Freddie Mac product, they couldn't. They'll have to do a jumbo product or a portfolio product because Fannie Mae won't buy that loan.
So anything over, just to recap, so anything over 726
It's high balance.
Is high balance.
Up
So
to $1,089.
but that's in high cost.
High cost areas
High cost
only.
areas only. So let's say for New York.
New York, yes. So
Okay.
you're buying a single family, right? New York, Rockville Center,
Right.
you can get Fannie Mae financing up to $1,089.
Up to $1,089 in high cost areas.
So that means you could buy probably a $1.1 million house and put 5% down.
So that rate that it's here for 30.
So this here, we brought this up to trying to educate you guys. When you see rates posted, interest rates posted online,
Yeah.
it's always primary residence, 740 credit score, 20% down, conforming loan limits. It's not
Okay.
for investment properties. It's not for owner-occupied multifamilies, right?
Right.
It's not for jumbo unless it says jumbo on
Yeah.
it, right? So most of the time when you see in this advertisement, because people will say, well, I see the rate is 7%, but you quote me 8. Well, you had a multifamily with a 640 credit score. You see what I'm saying? So I just want to make that clear before we continue so people
Gotcha.
understand what the hell I'm talking about.
You said 740 credit score for that too?
Typically, these rates are supposed to 740, 760, the
Okay.
highest tiers.
To get these
Right.
rates.
Now, do everybody in class understand this? Type yes in chat or type no. Type yes in chat or type no. Do you guys understand what I just said before I go forward? Because I just want to make sure everybody's on the same page and understand these things. Type yes in chat or no. All right, so we got a lot of yeses.
Okay.
All right, great. So let me move on. Now, you have the 30-year fixed rate right now, 7% on average. That doesn't mean you're going to get a 7% interest rate. Your rate can be a point higher than this, a point and a half higher on this, depending on your overall profile. And let me just say this too. We did a whole video about this, and we called it Big Changes Happening in the Mortgage Industry when I said, yo, come like in the next month or two, I think it was May or something, or into April, that mortgage rates going to go higher
Yeah.
because of the LLPAs. Well, boy, oh boy, oh boy, they're going to be much higher come when that goes into effect. But what they're doing is, let's get back to the topic. What the feds are doing is they are making it unaffordable for a lot of home buyers out here. They are making it unaffordable for a lot of people who even want to rent.
Yeah.
And what the Fed chair is saying, that he sees no signs of slowing down. He said the inflation data is not moving lower as they would expect it to. It's not moving lower fast enough for them.
Right.
And they feel as if that now, like a couple months ago, they liked the direction that inflation was going. It was going down. We reported on this too. But now it's slowing down and it's not dropping as fast as they wanted to drop.
Okay.
So what he's saying today is, well, now we have to probably raise rates and keep them higher for a longer period of time. So that busts everybody's predictions going into this year.
Does Christmas and that fourth quarter have anything to do with that?
Everything has everything to do everything.
So at that time, couldn't it just be like just because of that time period that the rates were probably affected because of Christmas and shopping and so on?
No, because generally in the wintertime, were you talking about mortgage rates or the Fed funds rates?
So when you said before that when they're trying to like raise rates and control, the prices on everything, what do they actually have control over?
They have control over how banks lend to one another and lend to consumers, right?
Okay, but they don't have. What about like stuff in the stores?
No, but that has to do everything, right? Because where you think these businesses get their capital from? To
Right.
buy the goods, to make the goods,
Yeah.
to produce
So-
everything.
So then, yeah, I mean,
They affect everything.
Right.
The money affects everything. The capital runs the world. The money rules the world.
Yeah.
Right? So like everything, even your credit cards are now more expensive. Your APRs go higher. Right? Everything is more expensive
Right.
to deter you from stop spending money.
Yeah.
So if you stop spending money, then the economy will slow down a little bit, and then that will what? Bring inflation down. But it's not working. It's not working. You know why? Because it's global warming. February is 65 degrees. We outside in New York. You know what they're going to do when we outside? We're going to go to fucking Pergola, and we're going to get some hookah and have a good time. We're going to go shopping. We're going to go places.
I think
You're going to travel.
Yeah.
You're going to do things. Unemployment's still at 50-year lows right now. People still got jobs. Money is still coming in. People going to continue to spend. Housing market, right? You can take this down right now. The housing market right now has appreciated 5.5% year over year. So it's still appreciating. Although the deceleration is not 20% what it was a year and some change ago, 20+%. But appreciation is still appreciation, ladies and gentlemen, any way you want to say it. Any way you want to say it. Appreciation is appreciation. And in a normal real estate market, it normally appreciates on average 4.5% annually. So if we're at 5.5%, we're still up than what it normally is. So this is going to be very interesting over the next couple of months. I said, like last year, this is going to be a cold winter. And although physically it hasn't really been that cold in the winter, but with these rates and the way things are going, oh, it's about to be cold, baby. It's about to be cold outside. Because you know what's going to happen? People who can't afford nothing, they're going to have to sit on the sidelines. And the people who can't afford stuff, they're going to be out here buying things. Now, I say also to say this is an opportunity.
Yeah.
Do you guys see the opportunity in this? I wish we could play that video again because they said something in there that speaks to the opportunity. They said that people can't afford to buy houses, so what are they going to do? They are going to rent.
Yeah.
Hence why I have these two bad boys right here. House Economics, Real Estate Investors Manifesto. Webinars this weekend, webinars at the end of the month, continuous education here on YouTube every single day and all my social media platforms. The next 18 to 24 months, I've been saying this for like 4 or 5 months now, 6 months probably. The next 18 to 20, no, that's not it. The next 24 months is going to be a huge opportunity because as they continue to increase rate hikes, and if mortgage rates continue to follow suit, and if inflation doesn't go down the way they want, then what's going to happen? People are not going to be able to buy. Let's listen to this again. Let's listen to this again for the people who just came in here. Almost 300 of y'all. Make sure y'all like this video. Let's listen to this again.
Supporting a Latino nominee to the open seat on the Federal Reserve. It's been more than 100 years. And a Latino has never served on the Federal Reserve Board. And I know there
That's
are many
crazy in
strong
itself.
Latino economists and economic experts who would capably serve. So I want to put that out there. Chairman Powell, I also sit on Senate Finance. Right across the way, we are talking about affordable housing. I think for purposes of so many of us across the country, including in Nevada, when we talk about affordable housing, it's also about workforce housing. It's about making sure families that are working so hard have an opportunity to keep a roof over their head. Right now in Nevada, if you're making minimum wage, you have to work 75 hours
Pause.
A week just to be able to afford.
Think about what you heard what she said, right?
Yeah.
If you make minimum wage, you got to work 75 hours to afford housing. That just sounds crazy, right? But again, they can't afford that to buy. What are they going to do?
Rent, and even then, it's still probably tough.
It's going to be tight, but they're still going to keep a roof over their head because they're going to work harder, right? It's an opportunity. Let's play.
Housing. And so I want to talk to you about this. I was distressed to see in the report that that activity in the housing sector has contracted as a result of the elevated mortgage rates, and you've been talking about that. I often hear from Nevadans who say, I don't know if I'm ever going to own a home, and many feel resigned being stuck in a cycle of renting. So,
Pause.
Chairman, how do the
Pause.
Federal Reserve economists and leaders
That's important. That's just not Nevada, people. That's America. Think about how many people y'all can't afford to buy real estate because of this. And what she's going to say next is, shouldn't we get it back lower so it could be a more affordability? Fed like, I don't care. We're going to go to that part in a second. But think about the opportunity. There's always going to be casualties at war, ladies and gentlemen. I'm sorry. I was once a casualty at war, Tooks. The market crashed. I lost everything. I didn't have multiple streams of income the way I do right now. I wasn't disciplined. And when I did have a couple streams, I blew it all on foolishness. I was a spender.
Yeah.
Right? There's always going to be casualties. It's unfortunate part of life. And war. But ladies and gentlemen, let's not get it twisted. We are at war. We are in the war of building wealth for black and brown people, bro. So there's going to be casualties. Not everybody's going to see the promised land. You know, like Saving Private Ryan, when they was in the boat, and they all about getting off the boat, and then you getting off the boat. Everybody getting wet up.
Yeah. That's it.
You got to duck and roll, baby.
Yeah.
Or you ain't going to make it back home. This is just unfortunate part of life, right? So there are always going to be casualties of war. But those who can do it, there's an opportunity in every crisis and recession. Let's play.
think about the balance between keeping interest rates low to spur that affordable home building and home buying while addressing inflation?
We have a dual mandate from Congress, as you well know, which is maximum employment and price stability. And that's really what we take into account. We don't
Price stability, you see?
And of course, interest-sensitive spending is the thing that gets the most support when we cut rates and the thing that is most affected when we raise rates. And that means housing to a significant extent. That's not a choice that we make. That's just the way it works. And we only have really one tool, which is monetary policy.
Pause it.
So
rewind it a little bit. Back, yeah, a little bit more. Yeah.
And of course, interest-sensitive spending is the thing that gets the most support when we cut rates and the thing that is most...
Interest, what do you say, interest, what, spending?
Yeah, something
But
like that.
anything that has interest attached to it is the one that gets hurt the most when you raise rates. What has interest? Mortgage rates, car loans,
Credit cards.
student loans, installment loans, personal loans. You know what I'm saying?
Yeah.
That gets hurt because he said what, intraday, he's using super big words, intraday spending or whatever he said, right? But basically, long story short, speak to me in layman terms, Fetch. Like, come on, pal. But basically,
I think it's just you forgot because you have to kind of.
whatever he said, but basically their focus is not on housing and renting and all that.
Right.
It's the day-to-day spending
Yeah.
is what they're focused on with bringing down inflation. And if the housing market got to hurt, if the rental market got to hurt, if all these things that have interest tied to it have to hurt temporarily for the greater good, hence, these are the casualties at war right now that we're willing to suffer because people can't buy eggs because it's too expensive. The ground beef is too expensive. Hell, you can't even get oxtails or duck or nothing like right now because it's too expensive and the stores won't carry them because it costs them too much to get the product in, right?
Yeah.
So everything's more expensive, even when you go to restaurants now. Every restaurant that you go to, the pricing is up a little bit because the cost of those goods are now more expensive for him. But they don't care about housing. Fuck it. Something got to be a casualty. So when there's a casualty, there's an opportunity. Let's play it.
Into account. We don't, and of course, interest-sensitive spending is the thing that gets the most support when we cut rates and the thing that is most affected when we raise rates. And that means housing to a significant extent. That's not a choice that we make. That's just the way it works. And we only have really one tool, which is monetary policy. So, you know, we don't really try to use our tools to affect broader housing policy, but really just to achieve our statutory goals.
Look, man.
Good.
I need y'all to hear the opportunity in all of this. Now, you can take this down. The opportunity in this is for everybody watching this right now. First of all, y'all need to all make sure y'all like this video, right? Yes, life does cost too damn much right now. I agree with you, right? I agree with you. But if it's costing too much, how do we run our place? What are we doing to bring in more money and multiple ways of bringing it in? Because let's call a spade a spade. They're going to keep raising rates. They're going to keep pumping money into the system at some point, right? It's just a cycle. Raise rates, pump money. Raise rates, pump money. Raise rates, pump. They got trillions of dollars of debt for a reason because they're always pumping money and spending money. This is what all governments do. They print money like it's water, right? So now what do you all have to do? Like Andre Hatchett just said, it's time to get serious. It's time to go to war. And the war is to build wealth. These rates are going to continue to go up. It is what it is, and it ain't what it ain't. What are you doing to make more money? What are you doing? How are you going, if you're going to buy real estate, are you going to buy smart? Are you going to buy wise? Are you going to now go in here and negotiate? Are you going to be an emotional home buyer?
Yeah.
Are you going to go in here and say, you know what, let me use the products that's available in the lending space to now force my appreciation to the best of my ability? Can I use a 2 or 3K? Can I use fix and flip loans? Can I use Fannie Mae home-style loans? Can I do construction loans? Like, am I going to use these things to where I can get something that's underpriced, undervalued, and use these products that's available to me to force my appreciation and put that sweat, that quote-unquote sweat equity in it, right? Rates are going to continue to go up right now. This kind of busts a bubble in everything because inflation is moving slow, so rates are not going to drop. And now with everything, what Powell said today, rates, 30, 40 basis points, just like that.
Yeah.
In a couple minutes, rates rose. So, and when these new LLPAs kick in the next 30 days or so, when you guys are going to get mortgage pricing them in about 30 days, even if rates drop, they're still going to be higher because now the government is taxing us even more on the back end that you guys don't see. I did a whole video about it. So the only thing that we can do if we're going to buy real estate, whether it's a primary residence, whether you're buying investment properties, is now is the time you have to be extremely smart. You can't be house rich and cash poor. Look, if you ain't got no money, it's okay. Sit on the sidelines. Learn. Go watch YouTube videos. Join communities.
Yeah.
Get your knowledge up, right? And focus on stacking your money. Don't go out here and let the internet get you into foreclosure, B. Because the internet will get you in foreclosure because you're trying to keep up with the Joneses, right?
Yeah.
If you want to get into real estate, hell, go get your real estate license because people got to rent and you can make money off of helping them find apartments to rent or renting houses, right? So if you ain't got money, it's okay. Figure out a strategy so you can make some money so you have ample reserves and you have ample income coming in. And then when opportunity meets preparation, that's typically when success happens, right? So when you have the money and you prepared for it, and now you have the money a year from now, 2 years from now, when a new administration take over, they may say cut all the rates and start dumping all money back into here. And then now that might be your opportunity. Hell, home prices might be a little bit more affordable at that point. Who knows, right? It might be, like right now, it's 5.5% year over year appreciation, right? So we see the deceleration has definitely happened. It's a real thing. It hasn't declined negative from an annual perspective nationwide. Right now, certain markets, now that's depending on, this is all, remember, real estate is local too. So there's some markets like Atlanta, Miami that's still on fire, 10, 15% appreciation. It's crazy, right? But there are probably other markets that are teetering, about to go negative, right? So always remember, real estate is a local thing, not nationwide. But when I speak to you guys, I'm talking to you from a national average perspective, not your neighborhood.
Yeah.
But that's why you got to learn your neighborhood or wherever you're looking to buy at or invest at. And you have to learn it because the Fed is giving the opportunity for real estate investors flat out. And people who want to buy multifamilies, they're giving you an opportunity to get great tenants right now because people want to live in good neighborhoods. Mm-hmm. And the people who can maybe afford a $2,000 rent, $2,500 rent, they probably can't afford the $4,000 mortgage in New York or $5,000 mortgage in New York, but they can afford the $2,500 rent, $3,000 rent, but not the $4,000 or $5,000 mortgage. Now, if you got a good product, they're going to come rent from you. So the opportunity is us as real estate people is to buy smart, be patient, and make wise decisions on your investments. And you can't go wrong. Now, from an investor standpoint, with these rates, especially if you're doing like DSCR loans and no P&L loans and things like that, interest rates are going to be a little high. You're going to be in that 9-10% right now. You got to make sure you're running your numbers properly. Because a lot of I speak to people every day looking to get funding, and I tell them, tell me your numbers. And when you hear their numbers and they think they're cash flowing, I'm like, no, you forgot this, you forgot that, you forgot this. What about this? What about that? And they're like, oh, I didn't think about that. I was just thinking my mortgage payment. Like, no, your mortgage payment ain't the only expense of a property. Like, so you have to make sure even more now, especially with these highest rates, that you are analyzing properties correctly and making sure that you are checking your comps on your rental markets. You know what I'm saying? Mm-hmm. And making sure those numbers are accurate. Because sometimes some realtors will give you some bogus numbers, or that listing might have some bogus numbers on it. But in every listing you will say, buyer is responsible to do their due diligence. Do your due diligence, my people. Yeah. Do your due diligence. Because people are buying deals for investment purposes, and they're not deals. They're not cash flowing. They're making 3% cash on cash return. Like what? What are you doing? Why would you even want to buy this?
Probably just to say they have an investment property.
Because most people just want to get in the game. Exactly.
Yeah.
People want to say, oh, I brought a house. Hey, look at me at the closing.
That's exactly what
they do. Their little TikToks and their little boomerangs. Meanwhile, you ain't got no money, man. You house rich and cash poor right now, man.
Yeah.
You just spent all your money on this house that you can't even afford. So for my people who watch me, people who are buying the books, let me put them up again just in case you don't see them, right? Be smart. And that's always my word, right? Is be smart. I'm not going to be one of these people that's going to rush you into foreclosure. I want to tell you, be smart as possible, because this is going to get ugly. For a lot of people, there's going to be a lot of casualties at war. I'm always going to tell people, be prepared, have money, and stay the course and stay focused. What you say, NICU grad? I watched the Fed Congress meeting, and they're raising rates and trying to lay off 2 million people. Well, there you have it. People going to get laid off, but people get laid off every day, B. People foreclose every day. People get laid off every day, right? This is just, unfortunately, casualties of war, right? We're so numb to it now because it's just been happening. Shit, since I've been in this business 20 years, this is always happening. Banks open, banks close. You work here one day, you work there the next day, right? That's just been my industry for my entire career. So I guess I'm numb to it.
Yeah.
You know, it's like a soldier in war. Like once you've been to war and you hit gunshots, you numb to a gunshot.
Yeah, it's
Or a gunfire, I should say.
It's pretty common in every work, I think. Yeah,
It's normal.
it's normal.
Novice and High Tech Cap, shout out to you, said novice investors get on the sidelines. I will tell you, novice investors need to learn more. Novice investors should collaborate more, put more money together, group economics. That way you have create more partnerships, even for us investors who are experienced. We have to partner right now, right? Because we don't want to deploy all our capital into a couple deals. We got to deploy our capital smart. So I need to collaborate with you. Yo, let's put this together. Let's go buy this. And like we whack it up, right? Because 100% of nothing is nothing at the end of the day. You're better off. I'd rather own 25% of a lot than 100% of nothing.
Yeah.
So for my first time home buyers, you know, we got the workshop this weekend, the master class. And I charge you so low. It's only $19.99. It's $20. You spent $20 on Burger King last night, so it's okay.
Oh.
Yeah, it's a word.
Burger King.
Right? But now I got to do it. Now I'm going to rethink my whole thing because we're talking about USDA loans and VA loans, but I might do a whole house hacking section or something. I don't know. I'm going to figure all that out. But it's more important for my first time home buyers to now buy income producing properties. Right? Income producing properties. I got the email in the building Saturday. Shout out to you. Income producing property. We're talking about NACA too. USDA, NACA. I might do VA. I'm not sure yet. But we're talking about NACA, and I'm bringing a NACA loan officer on too. I never told y'all that, but that was a surprise. But I just told you now. So we have to buy, my first time home buyers, income producing properties. It's very key. If you don't live in an area that doesn't have multifamilies, find one that has an ADU. Find one that has a basement that you can possibly Airbnb or pair space it. We have to be creative.
Yeah, I was going to say, basement's probably your best bet out here in Long Island, I think. Right?
Well, in Long Island, it's different, right? Definitely your basement. New York, Long Island, basement all day. Hell, rent out your garage, like your driveway, depending on some areas. Like, that's what I'm about to do in one of my cribs. The garage, the driveway, let me rent that out because it brings in more income.
Yeah.
I need to create more cash flow to come out the properties. We got to be creative, right? And yes, black people got hurt the most in the last crash because we were uneducated and we were so happy just buying shit and buying houses. I was one of those people. I was in the business. I didn't know nothing. I was just young, dumb, and full of it. And I was just like, yo, let me just go.
Yeah.
And I got hurt by it too. But now there's no excuse.
There's too much information out there.
We're on this channel every day almost. And there's so many other real estate creators out here that are putting out great content as well. So it's not like it's just me. There's a ton of real estate creators out here who are doing great work and putting out good work all over America.
Yeah.
So the information is there. There's no excuse. And there's no rush. Patience is key in all of this. And it's hard to time things, but you got to be patient. If you know you got $25,000 to your name, why are you trying to buy a house?
Like I said before, just to say you bought a house. Just you want to flex, or
Why you
I
talking
mean-
so low, bro?
I'm talking low.
Yeah.
That's pretty loud.
You sound low to me.
Nah,
Oh, okay.
or maybe it is low. I don't know. I'm pretty tired. But yeah, I feel like a lot of people just want to get into. I mean, I get it. I would too, but that's 30 years, right?
30 years of what? You loan? You ain't staying in no house for 30 years.
I'm just saying, but if you did, that's still, you got to make that payment. That payment's still due every month, no? So
The,
why
pay,
would you?
the payment is definitely due.
So why would, if you only got 25,000 to your name?
Yeah, you're going to use all that to buy the house, and then what do you have?
That's what I'm saying. So that's a sticky situation.
Look, I'm going to say this like I always say. Don't be house rich and cash poor. You know your bills, you know your expenses, you know your lifestyle, and being broke ain't cool or fun.
Yeah.
So don't rush yourself into foreclosure. Don't rush yourself into a position you can't get yourself out of.